Good evening, everyone. Welcome, welcome. Hopefully everyone had a good trading morning so far. And now it's time to analyze some charts. Take a look at what's going on for today. Plenty of movement across the board. Not the best day in the world in terms of movement, but we did definitely have a couple opportunities show up that we can't simply ignore. So before we jump into the charts, as always, make sure to swing it over to slingshotfutures.com, scroll down, and click on the Join the Daily Outlook newsletter. From there, you're going to be able to register for our email newsletter list. You'll be notified every time one of these videos comes out. Along with that, in the email itself, we go over a bunch of stuff that we don't have time to talk about in the live stream, and that's going to be everything from stocks, crypto, options, Forex, you name it. If it's moving, definitely going to have it on that list. So make sure to sign up for that so you don't miss anything ever again. Of course, over here, the live trading subscription and trial info.
Robot dropping here too low.
I forgot I had my news feed
Romeo
going.
Bravo.
There we go. As always, on the live trading subscription and trial info area, that's where you can sign up for a free 3-day trial in the room, so you can hang out with us for a couple days, see what we're all about, see how we approach the market, see how we trade, and it's just a good environment to kind of see how everything works and operates. So make sure to sign up for that if you haven't done so already. Now, let's take a look at the news for tomorrow. Tomorrow has a lot of news going on, but not really anything that big for the U.S. One of the big things that we have, of course, coming out of the Eurozone, there's a lot of announcements coming out of the Eurozone. We have the 745, just a big block of news. We have the deposit facility rate, the ECB marginal lending facility, and the ECB interest rate decision. That interest rate decision will probably be the biggest news announcement out of all of them. But that said, we do have other news at 8:30 out of the U.S. Core durable goods orders for March forecasted at 0.5%. 8:30, the Eurozone back on again. This time around, they're doing a press conference, likely after all of this is done, kind of a Q&A session afterward. And then tentatively throughout the day, and probably later in the evening session tomorrow, going on to nighttime at least, for me in the U.S. Eastern side, the Bank of Japan monetary policy statements and the Outlook report are both coming out later that night. So definitely something that can potentially move the markets around, especially if you are a yen trader or if you're trading anything in relation to the Japanese dollar at all. Or the Japanese yen rather. Will have a lot of movement at that point in time when that begins happening. Looking at the charts, so far, the euro did end up pushing down and testing major support at 22.215, and man alive, what a gorgeous bounce there. Several bounces over and over and over and over again on that same location. If you look at a faster time frame at that 22.215 area, we can see the initial test gave a beautiful to-the-tick bounce. It bounced at that exact level. It bounced there. Then we came back, tapped down a little bit further, tapped down again, tapped down again. They are just not able to get it underneath these lows, and this level of support at 215 is kind of cupping price and pushing it back up again. Even in the face of a very strong downtrend, it doesn't seem to be stopping the bears from really attempting to take over here or bulls rather, take over on this downswing. Now, do I think that the buyer is going to be able to take over completely? In the long run, you know, again, we zoomed way out and we can see that this is an obvious range low, and there's a lot of things going on here that could easily entice buyers to buy in and hold for a very long period of time. You know, this is a location that buyers will be buying in thinking, you know, hey, in the next 3 to 4 months, we might be able to make it back up towards the highs. It's a longer term location, and that's going to get a lot of, on the faster time frames, a lot of chop and slop, a lot of back and forth, because you're going to have a lot of positioning from different trading environments. Daily charts, weekly charts, 4-hour charts like we're looking at, etc. They're all going to be positioning around this zone, and that's going to make it potentially a little bit sideways, range-bound, choppy, but with an emphasis on the bulls. We're still holding that 215 support, but we do have a new level of resistance, like we were talking about yesterday. That support was a little bit further up here when we were originally looking at it. That support was right around here, kind of dipped underneath it, popped back up again, and we were talking about how the bottom of this wedge is holding as a large area of resistance, and a lot of people are taking profit there. That makes sense, right? That level of support originally did find that bounce. We came up into resistance, and everybody took profit, pushing the market lower. The new level of support at 215 is what we found in the early morning in the live trade room this morning, finding support off of the earlier double top breakout point back in January, and they do seem to be supporting that level quite a bit. I screwed up my breakout. Well, it's fine, whatever. This whole area down here is a buy zone, but that's kind of the location that we're looking at. Now we're seeing buying accumulate down here at these lows. Might punch a little bit further. I don't necessarily think the sellers are done, but again, in the long term, we're going to have a lot of buyers who are potentially looking to build into this location as well, which can make it a little bit choppy, sloppy. New level of resistance on the euro at 22.905 on that drop to the downside. We'll see if the sellers can regain any confidence on a retest of that, but for the most part, at the moment, buyers are defending in the lows, and we're looking for, in this case, potentially a bounce. I don't want to be the first one to come into the in a line with, you know, the fact that we have 4, 8, 12, 16, I mean, a day basically worth of bearish pressure to the downside without a single bull bounce. I don't want to be the first one buying it other than really small term, right? On faster time frames like the 5-minute chart, that kind of thing. Long term, I think this is trying to catch a knife, and because of that, we're going to need to wait for a first bounce and a secondary bounce as excess proof that the buyers are taking over. And what would make it even nicer is if that after that secondary bounce, they trap the low and turn back up again. That would be a huge clue in terms of what to expect on the euro. For right now, though, I think it's just kind of a sit-and-wait game. Unless you're short, then you're just kind of hanging on. If you're long off of this area, then it might be a little bit of a bumpy road for me personally. I'm just kind of waiting to see what they want to do. Over on gold, we have a lot of bearishness to the downside. Very similar situation here. We were saying yesterday on how they missed that level of support down there at 22.6, and if it does end up coming back to it, we might end up seeing a little bit of a breakdown. I was looking for support down at 17.4 because it lined up so nicely with that rising wedge. Didn't end up getting that test. It didn't quite make it down there, and it looks as though the buyers are defending that low so far. Now, on the faster time frame, 5-minute chart once again, zooming in a little bit closer, this zone is going to be a big area of interest because we have the sellers trying to break down this level, and they failed. They pop back up, buyers didn't get anything going, and they fail back down. But the sellers try taking over, and they can't break down through a new low. We're seeing a little bit of a problem area forming here for the sellers and the buyers. They're not really getting anything done. Buyers who bought off of this level will likely not want to see that low broken, so there are going to be a lot of stops here. And that means that also we're going to have a lot of buyers who are looking at this as an actual risk calculation, meaning that a 1-to-1 risk calculation for targets are going to be around 25. A 2-to-1 risk calculation is going to be closer to 27. So we have buyers that are in, they've been holding, it went against them for a little bit, not a ton really. But we're having a hard time seeing buyers really support this level at 22.6, but at the same time, sellers aren't able to get anything done either, and it's creating a little bit of a sloppy situation here. Really just depends on what happens. You know, if sellers can break down and start breaking through this low, that's where you're going to start seeing a lot of the buyers who got in getting out, right? They're not going to want to hang on if it breaks to a new low. Not after a bounce up, potential failure, fails, bull breakout, fails, bull attempt, maybe. They need to hold it here, and if they don't, a lot of sellers are going to start coming in. Bump that back to a 4-hour. Aside from that, new level of resistance coming in at 33.9. Not much else. It's a very, very similar situation to the euro. The euro had that big drive to the downside, persistent, just back-to-back sellers. I really don't want to be the one to try to catch the falling knife, and this is another good example of, well, I'm not a juggler, right? That's not what I'm here for. So I would rather let the buyers put in a low, bounce, give me a secondary bounce as proof, and that will allow us some excess information. And once again, same situation, a trap below the low and then a turn higher again would be even better, adding a lot more emphasis to the buy side for a spike back up. Right now, I think we're trying to juggle knives, and I would rather stay away from that for the time being. Over on crude oil, we did have the inventories come out as expected from the API, came out as a bearish number. Selling pressure did swarm in pretty aggressively. Let me get rid of these API levels. And we did push down into support at 67.30. This zone at 67.30 was one that we've been watching for a couple days now, and the buyers so far have defended it. Even if we look at a faster time frame, they came really close, they just missed it, and then they pop back up again, showing that the buyers were preemptively buying ahead of that level. And now that we have a final test, they immediately rejected that as well. That was that near test, and here is the blow-off test on the inventories. Now, of course, inventories definitely had quite a bit to do with that excessive movement there, but either way, it did create a very nice bouncing area, kind of a launching pad for crude oil to catch a nice bump to the upside. For the most part, though, I'm still looking for this level to break down. I don't have a whole lot of faith other than an early bounce because of the 4-hour chart. We have an overshot at the highs, another miss on the highs, showing that the sellers are getting even stronger. I'm looking for this to break down to next support at 66.23. That's not to say, though, that we don't have other levels of support in the way. We definitely do. We just don't want to play with fire. So looking for continuation to the downside to break through some of these levels to get back down to 67.05 and then potentially down to that 66.23. Outside of that, though, looking nice and strong. Over on the S&P, man, oh man. what a crazy ride they had today. We pushed down into the lows of the wedge. That wedge was found from A to B, and we bounced off of the C points. When we first came in the morning, you'll notice this kind of bull engulf or bear engulfing candle. It was a bull engulfing candle for a little while. There was a period of time where this looked like it was going to form a secondary bull bounce to the upside and get this thing ripping higher, but 9:30 hit, and that completely shot that right down. They had an attempt to try to get going here on the S&P, and by the time 9:30 finished off, it was already a bear doji back to the downside. All the hope that the buyers had of potentially buying the lows of this channel were completely smashed, and now we have an area where now we've broken through support, probably going to find it as resistance to attempt to dive lower. The one big thing that does stand out here is that after such a huge bear move down, very likely you see a counter bounce. Sellers will have been in from, from up here, from inside here, I mean, even inside there, selling on the way down, and they finally get that big blow off where it slams through an area of support. Everybody takes profit. It's kind of like a gift from the market. It's like, oh, thanks, I'll take that. Thanks. Put that right in the wallet, It's so you get this counter bounce. That's not really enough to be a buyer. That's just a kind of a dead cat bounce, if you will, before pushing back down to the lows. But when they make it down to the lows, we closed outside of it, then it immediately rejects right back up again. Now, that said, there's still 45 minutes left on the candle, and a lot can happen in 45 minutes, as we know, but it's going to be really tough for them to turn this bearish again. And given the situation that we're in, this could be a really big sign of potential exhaustion at these lows, where the sellers are not able to keep this thing going and they're going to have to correct internally. Now, an internal correction would mean breaking back above the wedge highs, breaking above resistance, which we have at 26.35 and looking for the market to rally up to the next big orange line resistance, 56.75. That was the same level that we found a beautiful bounce for support. Now, looking for selling resistance there instead. Makes a lot of sense. The sellers are unable to keep this going, especially if this candle closes looking like this right now, in the next 45 minutes or so. That's a pretty big red flag for the sellers on a breakout. A lot of sellers probably holding the bag on this one if they haven't gotten out already, and chances are we're going to start seeing a corrective phase as those sellers begin to exit. And then, of course, we have the bonds. The bonds over here, they smashed through support, utilized it as resistance, came down into support, smashed through support once again, utilized it as resistance. You get the idea. Pretty rinse and repeat stuff going on here for the bonds. Really just this movement as a whole. They've been bouncing back and forth off of these levels, and all of the levels that we've been looking at have been working really well, just not on the initial test. It seems like we have a situation where the buyers, they come down into that major support, they try getting it going, it fails, everybody exits at break even, hits the reverse, uses it as a resistance, drives the market down for a beautiful trade, comes back, gorgeous trade, you get the idea. So obviously this level is still very important. We don't want to lose sight of that 142.04. It's holding very nicely as a resistance, and we are driving lower. Next big level that we're keeping an eye on for the bonds is going to be down at 141.375. Let me get the actual 16th level, 141.12. There we go. And looking for the bears to just keep this drive going. The thing is, at some point, we're going to find some exhaustion down here. The sellers can't keep this pace going forever, and they're going to need to correct back. But that said, it's not my job to try to call the bottom. I'm looking at this thinking I want to find continuation to the downside. I want to keep selling along with it until the selling stops working, and then potentially look at bumping back up again. So looking at the overall movement that we have so far, I think we, are probably overextended, but at the same time, the sellers certainly are not getting out of the way, and, well, we got to keep going with them. Pop that down out of the way. Got out of my contract yesterday, now looking to get back in before it closes. Thoughts on LE? On LE, good old live cattle. Live cattle put in an attempted bear move to the downside yesterday. It did not do so well. They had a beautiful bear bar, and again, we're talking about how sellers are fading those highs. They obviously are. But as soon as they triggered in just a gorgeous bear bar, they hit that sell side underneath it and immediately popped right back up again. Yikes, right? There's going to be a lot of sellers who are stuck on this. And if it does get a good bull bar, right? If this more recent candle right now closes strong bullish, that's going to have every seller that took that bear bar, their stops right above that bear bar. They're not going to let that trigger, and they might even put it above the bull bar. So with this strong bull bar that's forming right now, if it closes looking like this, a couple ticks on the highs of a wick, not that big of a deal, but a complete counter argument against the bears, if it triggers above that bull bar going into tomorrow, there's a good chance that a lot of sellers are going to be hitting the exits above that, causing a stop run back up to around the 21 period moving average. Wouldn't be that big of a surprise. That's at 107. We'll just say 107.4. Close enough. Sounds like a radio station. But I think this sell candle probably trapped a ton of people. And that goes back even further because we also had another beautiful sell bar here, which probably trapped a lot of sellers. So there are already sellers who are stuck in this that haven't been able to get anything going in their direction before seeing it reverse back up. And we can see what happened here. Sellers that were in that, they put their stops above that because they're not going to allow that to go any further. It stops out and it runs for another day and a half to the upside. Kind of the same situation that we have going on here. So I think live cattle, if it closes strong like it looks right now, I'd prefer maybe a little bit more strength on the upside, a little bit less wick on the top. But you know, any counter argument against that strong bear bar, I think has a good shot. Now this is looking better to close with a little bit more bullish emphasis. Sellers exiting above that because they just don't want to be the one holding the bag. Otherwise, though, it looks pretty good. I don't think the agricultural markets today were just, man, they were a bummer today. They didn't do a whole lot of moving at all. Soybeans, not really much going on there. You know, wheat had a nice little lift towards the end of the day, but the morning session this morning at 9:30 or so, the ags were so slow. It was brutal. Ended up getting most of our opportunities on the S&P, but seems like when the S&P is slow, the ags pick up. I think it's just kind of a shelter market for volatility. But, you know, LE and some of the other ones, GF would be another good counter pair, also seeing that same trap. I think if this does close strong, we have a good shot at breaking out higher tomorrow if it pops up. Wasn't sure if you cover Forex. Yeah, I do. Anything that moves, I don't care if it's cockroach futures. I'll trade it if it's moving. I really don't have any emphasis or bias. That's why I like Thinkorswim, because it allows us to trade pretty much anything. You know, whatever you want. So if there's a Forex pair that you want me to cover for you, feel free to type it in. Take a look. Cover a couple of our favorites here. Twitter getting pounded today. Now, obviously, they did have earnings, came out 16 cents a share. Not very good from the looks of the market. We are seeing some heavy bear pressure to the downside on Twitter. And, of course, if we look over at Facebook, it's sympathy market. Kind of an interesting breakdown here. Facebook is actually seeing a little bit of a bull bounce towards the end of the day, whereas Twitter is still getting hammered. Now, Facebook had moderate earnings, $1.4463. We'll just say $1.46 in terms of the earnings. So a little bit better on Facebook than we found on Twitter, and Twitter is definitely seeing that that push to the downside, slamming lower. Now that we've broken through support at 29.71 and 29.43, likely inside of here we will probably see a bounce back to retest that as resistance. Primary objective now is breaking down through a new low and potentially a gap fill. So that is going to be the zone that I'm looking at next if they don't want to keep this train going to the upside. Got those right there. So 26.60 and 25.24. Now there is still time in the day. You know, it might pop back up and close back above these levels. It is possible, but a lot of dependency on how this candle wants to close, and a lot of this movement's on earnings. Obviously, the investors did not like those earnings, and we're seeing that reflected in price. Can you do SQ? Yeah. Take a look at Square. I like a good bit of Square. Square is one of those markets that's originally was a sympathy play for the crypto markets because they were one of the first big groups, right, publicly traded groups that began offering from their Square Cash app the ability to buy Bitcoin. I use it, and I think a lot of other people do too. And so when we're seeing right now a little bit of a pullback, they don't have earnings for a couple days yet on the 2nd, but what are we seeing? Well, if we look across at Bitcoin and Ethereum and pretty much all of the other ones, we're seeing a pullback, right? So I think right now we're seeing a sympathy play on Square where we're getting more of the movement dependent on Bitcoin than we are anything else. Bitcoin's pulling back pretty heavily, major support at 85.97.3, and now Square is kind of following along with that. That kind of fits the bill. You know, when Bitcoin was rallying higher, Square Cash was rallying higher as well. When Bitcoin starts falling, so there's a little bit of a dependency for Square Cash when it comes to Bitcoin, and it's kind of a factor that you need to keep in mind. I think long-term, cryptocurrencies as a whole have a very good potential of going higher, and if Square does want to piggyback off of the moves of crypto, well, that's going to bode well for them as well. So definitely something to keep in mind there. You know, for the most part, looking at zooming out a little bit here, this is obviously a monster of a bull trend, right? This thing has been going higher since really its inception. It put in a low of 806 back in 2015, early 2015, and just hasn't stopped going up. Eventually, this is going to need to correct for this to maintain health, right? A good, healthy trend doesn't go parabolic like this without correction. That's where this correction happened, right? That's where everybody's running around saying, oh, Square's going to zero, it's crashing. No, it's not. It's correcting in a healthy way. So whenever you see everybody starting to freak out that Square Cash is going to zero and it's going to blow up and blah, blah, that's usually when you want to start buying. You know, if you ever want to do any type of investment advice, go on to CNBC, and every time they say buy, do the opposite. You're going to do fine. I remember they had an announcement on Ripple. How to buy Ripple when it was over $3. They had a whole expose on how to buy Ripple when it was over $3. And then about a month later, when it was, you know, around $1, they had an expose on how to sell Ripple. So the long-going joke here at Slingshot is, you know, buy the rip, sell the dip. If you want to follow CNBC, that's usually how it goes. Just do the opposite. You'll be fine. Overall, you know, I think Square is pulling back. It's a very healthy pullback. This is exactly what this market needs in order to find renewed buyers on this dip. You know, for me personally, I would love to see not just a push down further. I want to see a push down on Square below 36. I would love to see a dip below 36. And if they could get a test of like 34, I'd be even happier. And that's with me wanting to buy, right? I want the market to fall to put price into a favorable position for a longer term hold. Because right now it's just, it needs to correct. This is way too parabolic. Now, it doesn't mean that it won't go flying up another $100. But at some point, it needs to correct. And when I start seeing traps on swing lows, you know, we're breaking a swing low. The same thing happened back here. You can see the follow through there. That's the type of environment that I want to find. You know, we're starting to break swing lows, swing low breaks, swing low breaks. That's where buyers are starting to buy in. And this location here, this is where buyers are starting to buy in. Next area, right there. Next area, right there. 200 period moving average, etc. So I think it needs a correction, but we are in an early buyer's territory for buyers to be jumping in, assuming that, you know, man, months from now, it could be pushing up very aggressively along with Bitcoin. You think the earnings will be a factor? Of course it will. Yeah, I mean, earnings always plays a part. For the most part, earnings have been historically pretty positive. Even when the earnings were negative, it still caught a bullish rally not too long afterward. So I think a lot of times, you know, that little bear spike that you sometimes see on earnings, I think mostly when it comes to Square, buyers are buying into that dip. We saw that, you know, if you look at the earnings, right? We have the earnings right there. Had a little bit of a daily dip. Buyers bought into it. We had earnings over here, right? A little bit of a dip. Buyers bought into it. So all of these earnings creating dips, I'm not really too concerned about it. If anything, it might just create a cheaper price to jump in at the rate that that Square's been doing, at least. I mean, you can see the common trend, right? This is before Square introduced its entrance into Bitcoin, right? Negative 29 cents, negative 8 cents, negative 9 cents, negative 4 cents. And then they started introducing Bitcoin, plus 5 cents, negative 4 cents, plus 7 cents, plus 8 cents. We're probably going to have another 5 or 6 cent gain on this. I would be surprised if it comes out much worse than that. It's just they're making a ton of cash on Bitcoin purchases. So I think that's definitely going to impact their earnings this time around, just like it has the others. Might be maybe a little bit more neutral, slightly bearish, because it is in pullback territory. You know, every time we've had earnings before is when the market's on its way up. This time we're getting earnings when the market's on its way down, so it might be slightly negative. This could just be nothing more than pricing in for buyers to buy in. But again, I still think we're in a short-term accumulation area for buyers. Otherwise, looking pretty good, though. Let's take a look at MasterCard. Zoom in a little bit closer here. MasterCard has dipped back and is now testing the lows of that channel that we've been talking about. This is that secondary area of interest. Buyers will be buying here, looking for continuation to the upside. Otherwise, looking for a dip down to trap below 167.94. I'd really like to see that. But overall, I think buyers are still accumulating in MasterCard. It's just they're trying to get a slightly better price. And if we compare that to Visa, Same industry, really. Visa is getting pummeled as well. Not that big of a surprise. You know, I think it makes a lot of sense seeing a corrective phase to the downside to buy into, and I'm really not interested in and actually, looking at Visa, we have a very similar situation where we have a mid-peak trap right there, that little middle peak that kind of trapped and then went flying higher. If we look at MasterCard, notice anything similar, right? We have the rally up. We have that mid-peak trap trying to rally higher, but this whole thing could be nothing more than a mid-peak, and that low right there at 167.94 is the area of interest. Either way, looking pretty good, though. Just looking for some better prices. New kid on the block, DDX. Dropbox, they launched their IPO not too long ago at the end of March, and so far it's been a really rocky road. They had a really bad expose on CNBC that caused a lot of selling and fear off of the highs, lots of sell volume coming off of the highs. For Dropbox, you know, the thing is, I believe they priced the, what did they price the IPO at? Wasn't it like $20 or something like that? Let's see if I can go, I don't know if the live news will have enough. Back on... I was hoping to see a price point. Dropbox, IPOs. I don't remember what the IPO was signed at, but I thought it was around $20, and they opened up at $27.75. So, I mean, yeah, that's a little bit of a bump compared to what the IPO was quoted at. I think if we can cross underneath $27.75, especially closer down to 20, that would create a very large area of interest, and especially if you can get a deviation to the downside. So if we measure up this high at 34.83 down to the low that was put in, if we start breaking down and we are, you know, then we're looking for support at 23.38 down to 20.67. Those are the two major levels of support that I would be looking for next on a breakdown of Dropbox. I like Dropbox as a company. I don't have any problems with them as a whole. They already have a solidified project and a product and a business before they went into IPO, which is actually kind of weird because most companies do it the other way around. So it was nice. It was a refreshing thing to see, and I think that definitely reflected in the price being a little bit higher on the launch. But I would like to see a corrective phase breakdown to catch some support at 23 down to 20s. Not much else going on outside of that, though, so I'll give everyone a couple minutes to type in any markets you may want me to take a look at. Otherwise, we will wrap it up. Pretty good day of trading overall. You know, crude oil on inventory days are either really good or really bad. I stayed away from crude oil today. All of the setups that were happening on crude oil were in all of the wrong places. And we can see this thing is just a chop fest all over the place. Back and forth, back and forth, back and forth. And ugh, man. And now we're seeing this monstrous rally. I mean, look at this thing. Right, so it's these are the types of days where I would rather just stay away from it. Instead, we found a bunch of scalps on the S&P, one way or another. There's always something moving, right? But man, alive, crude oil is just gnarly right now. That 67.30 area, if you did buy there, those are pretty darn good now. Putting in up to 68.10, you know, just a casual 70-80 cent bounce, no big deal. Oh, too funny. Nice rally to the upside here. More recent price action for crude oil. I'll have to wait and see if they can keep it going. But outside of that, that's going to do it for today. Not really that big of a news calendar for tomorrow unless you're trading in the Eurozone. A bunch of news at 7:45 and 8:30. But, you know, aside from that, like we always say, it doesn't matter what market you're trading. Always make a plan. Trade the plan, follow those rules, and it'll be just fine. Of course, underneath the video, click the subscribe icon so you don't miss us going live. We go live Monday through Thursday doing our live market analysis, and then you can click the little bell icon to the right? I don't know, one of those ways. Next to the subscribe button there that will alert you every time we go live so you don't miss it. Aside from that, though, if you have any questions, feel free to send me an email, jbrink@slingshotfutures.com. Rest up, get ready for the day tomorrow. Hopefully we get a little bit more fireworks going on, and yeah, we'll go from there. So rest up, and we will see you all tomorrow. Have a good one.